Let's be honest. Taxes is just another word for peasant problems. Because if you're rich, and I mean private jet with gold seatbelts rich, you don't pay taxes. You strategize around them. Legally, of course, because the best way to beat the system is to build it. So today, we're diving into the subtle art of tax avoidance and the polite cousin of tax evasion. Forget Panama Papers and shady Swiss accounts. The real magic happens in broad daylight, with a Harvard-educated accountant and a 300-page tax code in hand. Let's clear something up real quick. Tax evasion is illegal. Think lying on your returns, hiding money offshore, going full Wolf of Wall Street. Tax avoidance is legal. Think hiring someone in a suit to find loopholes your government kindly left behind. One gets you audited, the other gets you a TED Talk. You and I earn money. We pay income tax and we cry about it. The rich, they redefine what income means. Instead of taking home $1 million in salary and handing off half to the IRS, they earn $1 million in capital gains, pay 15 to 20%, and spend the rest skiing in Aspen. It's not cheating, it's knowing the menu and ordering better. There's a reason the ultra-rich don't work for a living. They own things, stocks, businesses, real estate, and those things make money for them. And the tax system loves that. Capital gains made from selling investments are taxed at lower rates than regular income. Dividends get special treatment. Depreciation lets you claim your assets are losing value while they literally appreciate. It's like getting a medal for doing reverse push-ups. Now, let's talk deductions, aka the magical word that makes private jets necessary business expenses. Some real examples: hosting a business meeting at your beautiful beachfront villa, deductible. Donating to your own foundation that happens to employ your own family, deductible. Flying first class to scout investment opportunities in the Maldives, you guessed it, deductible. It's a loophole parade, and the IRS is just waving from the sidelines. Why pay taxes as one person when you can split income across your whole family like a financial buffet? High earners often shift income to spouses or kids in lower tax brackets, though trusts, LLCs, family limited partnerships, you get taxed less, and little Timmy gets a head start on his Roth IRA. Everyone wins, again, except the government. Behind every billionaire avoiding taxes is a small army of tax lawyers, CPAs, estate planners, financial strategists who bill $1,000 an hour and think TurboTax is for peasants. These people don't just file taxes, they engineer tax realities. To recap what we've learned so far, the rich avoid taxes not with crime, but with creativity. Income is carefully engineered to fall into the lowest tax categories. Every asset becomes a deduction. Every vacation, a business retreat. The system isn't broken. It was built like this. The game is legal. The rules are known. They're just not invited to the table. If you've ever wanted to be the person writing off your Tesla as a consulting expense, hit that subscribe button. We're just getting started. So, you've maxed out deductions, shifted income to your kids, and depreciated your mansion like a boss. What now? Easy. You leave the country, but just your money. Enter the offshore trust, the rich person's version of burying treasure, except it's legal, untraceable, and your accountant has the map. Why do billionaires love the Cayman Islands, Bermuda, or Luxembourg? Zero income tax, zero capital gains tax, zero interest in asking questions. It's like Vegas for money. What happens there, the IRS probably won't know. Let's be clear, offshore accounts aren't illegal. They're just very convenient for delaying taxes, hiding assets, and making your divorce lawyer cry. The rich use them to defer taxation. That means the money's technically not yours yet, so you don't owe anything. It's like putting your income in a fridge and telling the IRS, don't worry, I'll eat it later. And you never do. Next up, shell companies. These are real companies, on paper. They have no employees, no office, and no actual business. They do own yachts, artwork, real estate, and even other companies. Imagine a Russian nesting doll of tax avoidance. You think Jeff owns the penthouse? Nope. His LLC in Delaware owns the trust in Panama, that owns the shell in the Caymans, that owns the penthouse. Good luck taxing that. Now for the classy move, start a foundation. This is the high society tax move. Think Gates Foundation, Bezos Earth Fund, or the insert your name here philanthropy center for whatever makes you look good. Here's how it works. You donate millions to your own non-profit, You write that off as a charitable deduction, your foundation hires your friends and family, you still control the money, technically, legally, and spiritually. Now, you're a philanthropist, which sounds way better than guy who doesn't pay taxes. Now, let's get immortal. Rich people don't just avoid taxes for themselves, they do it for their great-grandkids too. Welcome the Dynasty Trust. This clever setup skips the estate tax entirely by putting your assets in a trust, passing it down through generations, and never technically giving anyone anything. It's like the money is haunted. No one touches it directly, but it haunts your family with wealth forever. When normal people die, their families get grief and a funeral bill. When the rich die, their assets get revalued, called a step-up in basis, so that decades of capital gains just disappear. Example, Grandpa bought stock at $10. It's worth $1 million when he dies. Instead of paying tax on $990,000 in gains, the heir owes nothing. Boom. Generational tax wipe. Now, for the nuclear-grade avoidance tool, private placement life insurance, PPLI, sounds boring, it's deadly efficient. It works like this. You dump millions into a customized life insurance policy, that policy buys investments on your behalf, the gains inside the policy grow tax-free, and when you die, your heirs get it all, tax-free again. You've basically created a ghost investment fund the IRS can't touch. Other honourable mentions: 1031 exchanges, swap real estate and defer capital gains until the end of time, opportunity zones, invest in underprivileged areas, read gentrification projects, and get a massive tax break, loan against your assets, read cash, don't sell, borrow. No tax on a loan, baby. Why sell your Tesla stock and pay taxes when you can borrow against it and still buy another Tesla? By now, here's what we've learned. The rich don't hide money, they make it legally invisible. Trusts, shells, and foundations form the Bermuda Triangle of taxation. There are rules, but the wealthy play 4D chess while the rest of us play checkers with missing pieces. So far, we've seen how the ultra-wealthy juggle offshore accounts, shell companies, and dynasty trusts like tax-avoiding circus performers. But here's the real kicker. It's not a loophole, it's the entire damn system. And it didn't happen by accident. Ever wonder why a tax code has more words than the Bible, but fewer morals than an alleyway poker game? That's because the US tax code is a Frankenstein monster stitched together by lobbyists, billionaire-backed think tanks, politicians who've never filed their own taxes. Every clause, every deduction, every obscure provision about carried interest or step-up in basis exists because someone rich paid to put it there. Here's how it works. A billionaire wants to protect his dynasty trust. He donates to a politician's campaign, and then a PAC, and then maybe another niece's dog shelter. Said politician suddenly introduces a bill to modernize the tax system, and somehow rich families save billions, and nobody really knows what happened. It's legal bribery, but with better stationery. Let's talk about carried interest, aka the crown jewel of hedge fund tax scams. Here's the scam in plain English. You run a private equity firm or hedge fund, you make millions in fees, but you call it carried interest. Magically, it gets taxed as the capital gains rate, not income. So instead of paying 37%, you pay around 20%. That's a 17% discount for being rich and clever. It's being called out by presidents, economists, even other billionaires, and yet still legal. Oh, that's cute. You think Congress wants to close them? Here's a fun fact. Over 50% of US senators are millionaires. Many own real estate, stock, and private business interests. A bunch of them benefit from the very same strategies we've been roasting. Asking Congress to fix the tax code is like asking your dog to stop chasing squirrels. They can't. It's literally in their DNA. The IRS is supposed to be the watchdog, right? Except they're more like a three-legged chihuahua guarding a billion-dollar mansion. The IRS budget has been slashed for years. They lost thousands of auditors. The audit rate for the rich, lower than it's been in decades. You're more likely to be audited if you claim the earned income tax credit than if you run a shell company in Bermuda. Why? Because poor people don't have lawyers. Rich people are lawyers. Here's the biggest loophole of it all. We're used to it. We think, well, that's just how it is. I guess rich people are just smarter. Maybe one day I'll have a foundation in the Caymans. That's the brilliance of the system. It's so complex, so boring, and so normalized that no one fights back. And if you do, they just call you a class warrior and say you don't understand economics. Sure, you'd just pass major tax reform, break up lobbying groups, rewrite the tax code from scratch, and remove every politician with a conflict of interest. So, No. The rich avoid taxes because they can, and unlike regular people have the same lawyers, same lobbyists, and same access to lawmakers, it's going to stay that way. Still shocked? Or maybe you just took notes? Either way, like the video, subscribe to the channel, and drop a comment telling us your favorite completely legal tax dodge. Or just type "billionaires are wizards." Same thing, really.